uko na kakiru ama hauna kakiru? Uko tu namna hiyo? Kama uko tu namna hiyo, it's okay. It's okay, we shall talk to you about it. This Wednesday and next couple of Wednesdays, we shall be having some Wealth Wednesdays with our friends from Stanchart Bank, and two of them have joined us this morning. Edith Chumba is head of wealth. Leave it at that. Right? Yeah? When the kids ask you, so what do you do? I'm head of wealth.
You know, by the sound of it, it sounds even more serious than the CS for finance.
Yeah.
Because that guy just CS.
Yeah, and his job is only to spend.
It's to spend. This one is someone who creates wealth. Yes.
Head of Wealth and Retail Banking for Kenya and East Africa at Standard Chartered Bank, Edith Chumba, and Paul Njoki, CFA, is Head of Affluent Banking.
Yeah.
And Wealth Management Products.
By the end of this hour, I'm going to be rich.
Something's going to rub off on you, isn't it?
Aye. Edith and Paul, karibuni sana. Good morning and welcome to the hot seat of the Situation Room. Yeah, we will talk about wealth. First, we have to start with definitions, and then we'll go into now starting to create it and to manage it. All right. But before we do all that, CT will welcome you with the day's proverb. Just listen to the proverb, think about it, and give us your interpretation of that proverb. What do you think the proverb is saying? Citi, for the last couple of weeks, you've been south of Sahara, north of the Limpopo.
Yes. There's this part of the continent of Africa that is referred to as sub-Saharan Africa. That's where we are. We've been to Kenya, we've been to DRC. Now we are in Burundi, the Republic of Burundi. The proverb is simple. Hope does not have to be built on tangible things.
Hope does not have to be built on tangible things.
No, it doesn't.
Paul, that sounds like a proverb that you'd come up with.
Yeah, but it actually sounds true if you think about it, right? Because what gets into my mind is one time, and I'll quote our CEO, Kariu Kingari, in a management meeting, told us that, you can't tell your children straight in their face that you don't have school fees. Even if you don't. So that's what comes to my mind.
So what do you tell your children?
You give them hope.
They ask, can we see you? Like, relax.
Just do your homework and go to bed early, get ready for the morning, and we'll see what happens.
Yeah. Okay. Edith, what's your interpretation of this?
No, I agree with the proverb. It's not anything tangible if you think about hope. Even our own lives, no one here is sure of living in the next hour. None of us. And that is what life is.
Hope.
Yeah.
That's true.
Okay. So let's start with the definitions. What is wealth, Edith?
I think it's, again, back to that, I want to relate it to the proverb that you talk about. Wealth, in my mind, is accumulation of valuable resources, either monetary or otherwise. And it's something you cannot touch today. But with hope and hard work, you can almost realize or visualize what it would look like in future. That is my definition, my own personal definition of what wealth is.
Okay. So there's a bit of it that's tangible, and then there's a bit of it that's...
Correct.
That's hope.
Correct.
It's future.
It's future.
But you're building on it now.
Now.
I see.
And you can actually, on the reverse of tangibility or not being tangible, you can almost touch and feel it today. But it is futuristic.
There are those that argue that, being healthy is being wealthy.
Correct.
And because you're healthy today, then it's not about the future. It's about the now, that you're wealthy now. But you also need to make sure that tomorrow you continue to be the same way wealthy. Correct. Okay. And then, Paul, the work that you do as head of Affluent Banking, what is that? And we have to make sure that it is an affluent, not affluent.
Yes, absolutely. I think very quickly on the definition in terms of what wealth means to me is having options. And I'll stop at that, and then I'll go to affluent banking. So affluent banking looks at a segment of our clients who either are already affluent or are aspiring to be affluent. And when I say affluent means that, as you mentioned, wakona kakiru, as you mentioned earlier, all in terms of their dreams, hope, and aspirations, they actually are working towards that space. Okay, so we define the segment from two perspectives. One is, people earning salaries of up to or starting 150,000 shillings, and all aspire or do have about 1 million shillings that they can put aside to invest. So broadly, that is the definition. But I think the most important part of this definition is that the aspiration part of it, because wealth management or wealth creation is if somebody aspires to get there, then we show them the path to get there. So that's how I define the segment.
It's walking the journey. Okay, walking the journey.
Yep.
Now, we also talk about how that's what we've been talking about, how Standard Chartered Bank, well, number one, it's the only truly global bank operating in Kenya today, and dealt wealth of experience, again, wealth, with all your officers who understand how to build, grow, and maintain wealth over the years, and how then you come in and give all the support that you give. So when you talk about now doing the affluent banking and wealth management, Paul, what do you do? What's your day-to-day job?
Okay, so what I do on a day-to-day basis, and which is supported by a big team that cuts across relationship management, the branch network, and experts in different areas of wealth, is that the first thing we do is we look at our clients, and we, by way of asking a few questions, determine what is their appetite for investing. Okay, so we call that a client investment profile. That's one very important part, because it's like when you go to the doctor, they will take your blood pressure, temperature, a couple of things, so that they at least understand you before they can prescribe any medicine. That's part one. And we take that very seriously. The second part is then we look at the products and solutions that are available in Kenya and globally. And when I say globally, I actually mean exactly that. And, working with a network of different wealth managers and our own network of the banks across Standard Chartered network across the world, we curate those products, and then we rate them in a way that then fit into the client investment profile. So that, Latiff, if you're a moderate investor, we will be able to look at you and, let's say, prescribe or recommend products that are of that category. We don't expose you to very aggressive products that are not fit for you. Neither do we recommend you very conservative products that then don't meet your requirements. So those are, in a nutshell, what we do. Of course, it's technology, there is systems, there's people, all that, but the end goal is that we help clients be able to access products that are available globally at their appetite of investing. Yeah.
Edith, why is it important to have that attention, as we've known Standard Chartered to, on wealth management? Why? I mean, we know that it exists, but then there's a constant push for wealth management. Why is it so important?
Yeah, I think firstly, I mean, we have the advantage of being the only international bank today in this part of the world, and we are leveraging the capabilities we have globally to help the communities that we serve. I want to draw comparison in what we see in Asia or in Europe, even in America. The savings culture over time has been inculcated in those communities, and that is what has helped people grow wealth and pass those wealth to generations. Asia in itself, just pick India. Whenever you talk to any Indian family, they'll tell you this is third, second, fourth generation. Compare that with what we see in our African context. It's very difficult. Maybe it breaks at generation 1 or nothing happens. Or you die with your wealth. So what we are trying to do is, and to Paul's point, it's a life cycle thing that we look at. We have clients of different ages and they are at different stages in their life.
Yeah.
Today, if you see a wealthy person in Kenya, and it's sad that sometimes we think that way, that the way they made their wealth is maybe through corruption or old money, or they are born in rich families. That's really our mindset. But we want to now break that thing and say that anybody, literally, our nature as human beings is you want to succeed, you want the best for yourself, you want to live well, you want your children to go to good schools, right?
Yeah.
So what Standard Chartered is trying to do is, how do we drive that narrative? And not just drive the narrative, but bring the solutions. So our goal is to be the wealth lead for our affluent clients. And affluent clients, again, we have young professionals that are starting, and today, given we all had an entry level, your salary was probably, but over time, because you work hard, your salary increases. Then what do we do as your financial advisor? How do we help you to start building that wealth today? So that's really our intention. That's really the goal that we want to
There's this challenge that we Africans have.
Yes.
We sometimes loosely refer to that challenge as black tax. We sometimes loosely refer to it as the extended family system. How then do you manage the extended family system and create wealth at the same time?
Let me give you an example of a friend who shared with me their experience and literally the extended family challenge. So this friend of mine employed, very good job, but their salary could only take care of themselves, newly married, but they have siblings that they had to support, parents back at home. And what she used to do is would borrow money. Your salary is not enough. You spend your salary, you reach a point where you can't manage any emergencies. You're called from home, your mom is sick, you can't. So she would go and borrow money. Give me 5,000, 10,000, I need to buy medicine. And this day she met this very good friend who said to her on her face, stop this bad manners of always borrowing money. You're employed. Start saving. And when she was told that, she says at that point, she felt desecrated. I'm having a problem. I just came to you. Why are you making me feel like I'm a beggar? But she says that was her turning point. Because what this friend said to her is, if you earn 10 shillings, put 1 shilling aside. It will take time, but over time, you will have the discipline of always putting that money aside. To cut the long story short, today, this client is one of our best investing customers. And they say any emergency that pops up, they're not going to borrow. They will just go into that savings of theirs and solve whatever that problem is. Because the reality, we are Africans. That thing will not go away. And for me, my fear is our children. They will not do that thing. My own children sometimes say, hey, mom, you guys, you had issues. But the reality is that those issues are still there.
Yeah.
You see? So how do we help people to always remember, put this money aside?
Yeah.
And then what Paul has done, one of the solutions Paul introduced, it's money market fund. And it's very popular. It's called the AC Shilinga. So AC Shilingi, we retailed it to a level where you can start with 1,000 shillings. Do you know what we are seeing? 2 years. That fund is now 15 billion asset under management. That's the collective savings that Kenyans have put together. What we are now beginning to see is young people who are just trying this thing. They have built their balances, say, touching 500,000 or $1 million. They are now interested in getting into more sophisticated offshore. They're asking about mutual funds. They want FCY investments, cross-border. And it's, let me tell you, those young people, in another 10 years, they will be wealthy. They will be in that category.
It's very interesting, Edith. And I mean, I guess we can pull on Paul for that, because then you talk about planning for today. We think about that in today, you don't need a plan. Well, you do. So planning for today, planning for tomorrow, planning for the future. And, you know, I mean, let's be honest, when we think about banks, it was, look, you put your money in here, you take it out, the bank makes a profit, we call it a day, we keep it moving, right? But now we're talking about a different kind of relationship whereby the institution is actually interested in making sure that what you have, you can use for tomorrow. So what are some of the things that then you've been able to put in place to ensure? I mean, obviously we've heard about the Shilingi account, but then obviously with that in mind, that you can plan for tomorrow, you can have something aside for tomorrow.
Yeah, thank you very much. So, and you've touched our wealth management framework, and it is not necessarily owned by us, but is a very good philosophy to use when you're managing wealth. You know, today, tomorrow, and forever. I know you said future, but it's the same, right? Forever. And that framework help us when we have a conversation with you as our client to start having a clear direction of travel in terms of what are your immediate needs today. You know, pay your bills, eat, you're paying school fees, whatever it is, your immediate has to happen. What are your plans for tomorrow? I mean, if you're going to take your kid to college in 5 years, you want to put a retirement, you want to have an emergency, fund for whatever it is. And then the forever, meaning, is there something that you'd like to pass to the next generation? Now, of course, you can only pass something to the next generation if you did well with today and tomorrow. Okay, so that we spent quite a bit of time on that. Now, why this is important is because then the goals that we discuss with you, which are very, very personal to you, and mostly are life goals, children education, healthcare, retirement, and the like, then forms part of the conversation I started with Latiff in terms of then what is your appetite for investing? And we get to advise you. So if you're looking to put money aside for child education in 5 years, then you are faced with a couple of things to manage. One is that the cost of education will go high. It has always been going up. Okay, so that's called inflation. Okay, and it's the education itself in terms of tuition, but also the costs around the accommodation and all that. So those are going up. So inflation is enemy number one. And the second thing is, if you're looking to put your kid to college, and I'm using that as an example, in a country not Kenya, then you have to think of foreign currency. Again, then you have to take care of that. Over a 5-year period, those becomes really important risk that you have to manage. Then it informs the kind of solution that we recommend to you. Meaning, the investment that we recommend to you has to be earning a return higher than the inflation rate, so that it can maintain the purchasing power for you to be able to pay the school fees then. Okay? And also it has to, if of course the school fees will be in foreign currency, manage foreign currency. So we get to invest in foreign currency now, so that you don't wait to invest in local currency. And at that time, you're at the mercy of what the exchange rate would be. So the solutions that we create and for a client are really, really based on what the client goals are. Now, from a product perspective, Shilingi, today, you want some money to, you can get in, you can get out. Actually, it's 500 shillings minimum. You can get in, get out anytime. No cost to get in, no cost to get out. So that's for emergency kind of expenses and anything that you may need very quickly. Then, once you have that, then we start stepping to the tomorrow. So we introduce you to bonds, the bond market, and the bond market is really big, locally and globally. Very big market, which most people don't know. They think the equity market is bigger. The bond market is big and has a lot of opportunities. We can get you bonds anywhere in the world, US, UK, Japan, China, anywhere. Okay, but again, it's based on your goals. So if your goals are leading you to UK, then we discuss the pounds a little bit more, and we get you investment in pounds, and then. we got the mutual funds. So the mutual funds is a corrective. So like-minded investors pull their money together. In Kenya, we call it unit trust. Or they pull the money together, and that is invested and managed by a professional fund manager, and then it gives you the return. Again, this is a big space. We have over 200 different funds options. Do you need all of them in your bag? No. Probably you don't need a few, 2, 3, 4, to manage, to be able to put the right investment structure for yourself. But the choice is there. So the tools are there in the bag to use depending on the goals that we are trying to achieve. Yeah.
Edith, I've got to ask you, what's the difference between saving and investing?
Actually, there's a difference, but they're intertwined. So I think in my mind, you start first inculcating the savings culture. The discipline of saying, I have 10 shillings, I will put one aside. You accumulate that one, you build a balance to a level where you can now start serious investment, which is what Paul is talking about. It could be long-term, it could be short-term, depending on what your need is. Are you chasing returns? Are you looking at a future goal that you want to address? An example he has given about children education. Then now you get into that investment space. So it really, the investment space now addresses specific needs, if you like.
Okay.
Retirement.
Okay.
But for you to get into meaningful investment conversation,
you need to save.
You have to start building that balance.
But can you invest as a tool for saving? So you see this one bob,
yes,
out of the 10,
yes,
there's the one bob that I have to start building that culture of saving the 1 shilling. Where am I keeping it? Can I say
in
that
a savings account?
Can I start with investing it? The 1 shilling, tomorrow
and that's
there'll
why
be 2.
I'm saying they're intertwined, because even in that savings journey that you start, there's some return you're already getting. I mean, if you open a savings account, you will be paid some interest in it. But I think the bigger conversations now from an investment and wealth creation perspective is once you've started building a sizable balance.
Then you're now getting bigger.
Correct.
Because I'm actually looking at it off the back of just these 2 products that we talked about, the SC Shilingi, from as little as 500 shillings, putting into a money market fund. Maybe that can be. So I am saving, yes, but I am saving in the investment in the money market fund.
Correct.
Or I'm saving whatever I decided it's 5,000. It keeps growing, but it's there.
Correct.
At some point, then I come and tell Paul, okay, now my friend, I'm a Jew. Start showing me how to put into these pounds and the dollars and the euros and all and so on and so forth. So it's basically the journey that is continuous.
Correct.
Edith Chumba is the head of wealth and retail banking for Kenya and East Africa at Standard Chartered Bank, and Paul Njoki is the head of affluent banking and wealth management products for Kenya and East Africa at the same bank. And at this point, let me now plug in my relationship manager, right? Judith Thiembo, my RM at Standard Chartered Bank. Yeah. She does a good job. She's introduced me to Paul a number of times. Yeah. She does a good job. So this is to say yes. All these things that they're talking about, I've experienced it. They deal with you one-on-one. Our conversation today is about wealth. How are you doing with your wealth? Let's today focus on children's education and how then Standard Chartered Bank can help you inculcate that culture of saving, of wealth creation, wealth management, and thinking also going all the way into the future. Children is not just about children educating the children today, but it's also what shall you leave for your children when you hit the exit button.
You know, the discussion about wealth at the best of times is aspirational. Because you may even think you're wealthy, but you could always be wealthier. And then there are those who argue that the real wealth you have on this planet is your children. So when you plan and you think and you plot and you work hard and you save and you invest, yes, it's for yourself, but we mostly think children. What will we do for the children? How will we ensure that we do it well? Now, Standard Chartered tell us that this question that I'm asking myself loudly, they have an answer to. Tell us, how exactly do we combine all these things, given the vagaries of life that we now face, the economy and the downturn? English, downturn. Okay. How do we begin this journey of ensuring, and at what point in our lives do we begin this journey?
Maybe I'll start and then Paul will get into the details of, the specific solutions that we have. I think it starts actually as a woman, as a mother. It starts when I conceive. I need to start thinking about this child. God help me, I give birth with no problems to a normal, healthy child. That is where the journey starts. And I think some of us, we were lucky, we met people who gave that advice. When I started working in the bank, then backless, not earning too much, just an entry level, and I met this manager who said to me, start an insurance, Educare insurance for your son. And then for me, putting 500 shillings was too much for me. But he kept saying, no, just do it. Many years, when my son was joining Form 1, I got that money. The thing matured. And I used part of that money to enroll my son in a private university that he really wanted to. Would I have done it easily? I'm not too sure. Because then it meant I go and borrow. And this is what we are trying to help clients to avoid. If you live in Kenya today, most parents, today particularly, are really struggling when kids get to the level they are going to university.
Yep.
Each time a child is reporting back to school, you are running around looking for advance or a loan. And God help, it's less than a year, you haven't even repaid the thing. Because there's interest rates that you're paying, you haven't even paid the principal amount. So you're always stuck in this roller coaster of loans. And if you have more children, it even becomes more complicated. I hand it over to Paul.
To uncomplicate the situation.
Well, you're starting with more children.
Absolutely. I think
I'd like to twist it a little bit, Paul, and it's a very good foundation that we've set it here with Edith. Started with somebody who has children who are is close to university, high school, and lower ones, Magoti. But at that stage, and then now we shall come into those who have young families just starting out, and the difference in terms of how you'd advise them.
Okay. So those who have already had children in high school and colleges are in the today, in our framework. So they're already today. So they actually need the money to be able to afford their education. And if the savings and investment hadn't happened, then, children education cannot wait. You cannot tell your child, sorry, this year, at least not anymore, you will not go to school because...
Take a gap year.
It is a gap year, not anymore. Back in the days, I think it used to happen, but now you can't do that, right? So you need to plug that gap. So as a financial institution, yes, we do have products that help you to plug the gaps, the loans, okay? Because, the situation is at that stage, so let's plug the gap, and then of course, the period that we give you to repay back, over 60 months, sometimes 72 months, just so that we spread it out and ease the pressure. Because wealth management also is how do you deal with the spikes of cost, right? That may come. So solutions are there. If you're one of the parents or clients we have been advising or have been advised and while savings and all investing, then you're in a much better space. I think then what we need to think about is whatever the investment were, it could have been abroad or whatever it is, how do you turn that now to become a cash flow type of an investment so that it can yield you the cash you need so that at every start of term, you have cash to pay for school fees.
Yeah.
We find that solution mostly in the bond market because the bonds pay a specific, a known amount at a specific day in the future. So you can be able to know on this day, 20th of November 2024, I will receive X amount.
Yeah.
And then you can say, okay, fine, that would be my school fees for January. So I'll keep that now once received, and like every 6 months, a coupon is paid. So we help clients, and we've done a lot of that to help clients, liquidate some of the investment that are not as liquid, and put that into liquid investment so that then they're able to manage the cost of education. We have a lot of cases we've done that.
Yeah.
So someone sells their kafuroti, and they put money here, and then it starts actually working for them.
Absolutely.
Because the kafuroti was just pride.
Yeah, absolutely.
Beacon.
As opposed to eating the money that came from the plot or doing something with it, right?
Absolutely. Okay.
So this is the thing that a lot of folks might then be worried about. And it's just like that, the sentiment that you shared previously, Edith, is that, you think, somebody's asking you to put away 500 shillings. And let's be honest, that here we are in an economy where it's, things are tough for a lot of folks today, right? And you're thinking, maybe number one, fear of being late in the game. And am I too late to have to start this thing? Number two, whatever I have that can actually go towards something, in my mind, is too little. And I'm not going to go to Standard Chartered and say, look, I have 500 bob. I understand about the shit, but that's the sentiment, right? That it is too little. And when on earth will it ever grow to something substantial? And then number three, who's going to listen to me if I've created a mess with my finances before, or I've not really done what would have been required me to do within this system? Those are fears. Those are real fears and concerns that people have. How do we deal with those within this wealth management creation system? Because do we lock people out who just have 500 bob and want to aspire to have 5 million? Or how do they now start to take the steps towards this?
I think for me, start. That is what I would say. Just start. And the first step to make is meet Paul and the advisors. You see, to your point, and I hear those fears. I mean, putting 500 shillings aside, when will I even get to a million?
Sure.
Is it even worth my time?
But so let's eat the money.
Which is the worst?
If the problems you have
are bigger than the money you have,
eat
the money.
And you see, as you eat the money, your problems accumulate.
Right.
And you're still living. God help us, we live for whatever years. So I think for me is to advise, just come and have that conversation with Standard Chartered. And say, this is what I aspire to do. This is what I'm thinking. This is what I earn. Where do I start? What we've done is we have those structures to help everybody at whatever stage to plug in and start the journey. You see, the beauty again is if you start the behavior of saying, I will put this 500, or maybe it's not 500. You will sacrifice that, say, instead of 500, I'll put 5,000. It will pinch. It is painful the first 1 month, second month. I can tell you, by the time you get to the fourth month, you forget about it.
You get used to it.
And you will
not having
surprise
it.
yourself. You will surprise yourself. I can tell you the young people who've started the investment journey with Standard Chartered in the money market fund, who started with 500 or 1,000 or whatever, they celebrate when they meet the first milestone of 100,000. They celebrate. And then now they have this motivation to even build it. And they say, I want to be a millionaire in another 1 year. And it happens. And they go like, I did it.
So clearly when they celebrate, they don't withdraw the money to celebrate. No. Okay, they leave it there.
No, they don't.
Okay.
They build on it. They build on it. And that's it. That is it. For me, start. Just start. Don't feel embarrassed. Don't.
That's the point.
That's the thing. So how do you
That's
have
the
those
thing.
uncomfortable conversations?
Because you see, at the younger ones, there's nothing to be embarrassed about. I mean, I'm starting, I want to put in money here, I want to see how it goes. The older you go, and the longer time you've taken not to have started this journey, now the embarrassment starts coming in. So you come there and, how do you deal with someone, Edith, to make them actually feel comfortable and open up and say, you know what, I have actually messed up. It's been 20 years, I'm looking at what I have. It's like a plot there. We are in court with someone about that land. It's another one. City sold me a piece of land at just rock. And so on and so forth.
You're never going to leave the story of the rock, are you?
No.
We're going to deal with Paul. We're going to liquidate that thing. Right? Yeah. But then at that point, how do you then have that conversation that it's okay? You open up and tell me, and let's work together going forward. This is a safe space. There's no judging.
And that's what I'm saying. The experts are Paul and his team. I can tell you, I work for Standard Chartered, but I have an RM who is an expert, who sits me down and says, Edith, this is the direction. Have you considered this? Because Paul has made sure that they are well trained and certified, and they get information every single day that then helps them to have those conversations. And even ask you questions that will unpack things that you didn't even think of talking about. So I think, in my mind, Standard Chartered has built that capability over time. And would encourage potential clients and clients to start those conversations with the relationship managers in Standard Chartered Bank. Yeah.
Let me ask the question that we always ask with regards to some of these money matters. There are students who are in primary school, secondary, university, TVETs. They will all grow up. As a bank, do you have a plan? Do you have a structured way of ensuring that you get your clients when they are young, and you get them to understand the very things we're discussing when they're young, and they are willing to listen, and they understand it even before they start having any money that you can speak of?
That's a fair challenge. I think that's one area that we can do better, to be honest. We try. We go to institutions. We have those financial literacy sessions. But to your direct question, thinking about their own educational growth and career growth, I think it's somewhere that we can plug in, given the capabilities that we have. So it's some feedback. I mean, we are also learning out of these conversations. That is something that we can build on and make it sharper.
You know, it reminds me of a story. Why I asked the question, I'm reminded of a story I heard many years ago when I was young. And I was young once, okay? And someone was talking about how it is you determine the difference between somebody who is a marketer and a salesperson. And the story was, you know, you give stories of Africa, the continent, so it's one country. And the person came and found people who are barefooted and said, no, we can't sell shoes to these people. Someone else came and looked and said, my goodness, they're not wearing shoes. Perfect. Perfect. Yeah. And the setup. Now, I'm simply saying that many institutions we talk to in this very forum have plans, but for some reason, the future, especially where young Kenyans are concerned, isn't very clear. And yet, if you look at the population bulge that we have, it's in that group. And the numbers alone, even if the monies that they may invest in the future is not a lot, but because of their numbers, cumulatively, it'll be a great deal of money. Yes.
Yeah. If you like, I can take that. And I'll go back to what we did with SE Shilingi. SE Shilingi was an innovation by Standard Chartered, and we borrowed the concept from Brazil. I can tell you that. I won't discuss where we borrowed it, but we borrowed it from Brazil.
Are you returning it at some point?
Yeah, I think they'll come and copy it. It's won a couple of international awards, right? Yeah. And the concept really was to have a product that addresses people who are starting. Okay? Starting. Get you started. 500. Get you started, right? And then remove any fees and charges related to the product so that it makes it even easier for you to actually get started. Now, this is what you've learned. About 71% of all clients who've come on this product are below the age of 40. About 37% are below the age of 30.
Wow.
Okay? So, to your question, are we doing something about it? Yes, we are putting our money where our mouth is. We're actually doing it. Now, that's the starting point. Have a solution. The next thing that we're doing is, and this started during COVID, and again with the ability to conference, these conference tools, we started a series of financial literacy with companies, particularly their employees, and this has gone on. I can tell you, any single day, even today, there is a financial literacy program happening somewhere within the network. We've empowered the staff within Standard Chartered by training them, certifying them with world international certification, UK certification, and on top of the training we do, so that they can be able to have those conversations at multiple levels, different times, right? So we are building the capacity. And this is because we can see, the data is showing us that these wave of young people are coming up. They're educated, they are knowledgeable, and guess what? They're already trying out to invest. The other guys buying different things internationally, right? With this. So don't for a moment think that they are not trying. And that's where the real success will be. So in your example of people without shoes, we are seeing it and we are putting money to it.
Paul, I'm going to take you to task here. What you say is good, and it is to be lauded, it's to be applauded, it is wonderful. I'm not talking about those people. Not really. I'm talking about people who never even earned a shilling because they can't. I'm talking about people who are thinking of still being in school. Why am I thinking of this? Parents start accounts for their children. And the amount that you speak of, there are a number of parents who can afford to put that money aside for their children. So when they become of age, or when they are now in a position where they're beginning to earn, they will already have started that journey long before they started earning any money. That's where I was going.
Okay, got you.
And I was saying those numbers are huge, and it's untapped.
That's true.
That is what I was saying.
That's true.
Yes.
Take it on. Yeah.
Somebody's asking, sisi ambao tuko Gulf, how do we benefit from all this wealth of knowledge that you have at Standard Chartered? So Kenyans in the diaspora.
Okay. I'll tell you some of the wellness, we call them financial wellness sessions that we have. And I have done some, powered by, people in the further state. And I won't mention them here. But you find the people who are joining from across the whole world. Across the whole world. There's also one I did, in Uganda, covering that market. But again, questions were coming from Nigeria, from South Africa. And that is the advantage we get with the technology, that a speaker here can be able to talk to many people across the world, and they get the Kenyans diaspora are really connected here. The other way is also our own expertise in the organization. Could it be in Singapore, Dubai, UK? Even sometimes we bring speakers from the US. They're able then to also speak to us. So the technology has really enabled us, and this is something that we're doing. Can we do more? Of course, we can do more, but we've started the journey. Yeah.
Talk about investing in foreign markets, because you mentioned it a number of times. So there's forex investing, but also you said you are not only investing in the local market, you're investing globally. Expound a little bit about that.
Okay, so Standard Chartered, being a global bank, has a tap on the ground, in multiple markets, and therefore we understand those markets very well. So we do not only lead research that is printed; we also know it because we are managing clients on the ground, and that expertise we have curated it in what we call our Chief Investment Office, CIO. Okay, that CIO office, which sits in Singapore, and we have a representative in Dubai, curates investment opportunities from across the globe. I'll give you an example. You can invest in India. India economy is booming at this time. You can invest in India. How can you do it? Well, here in Kenya, we can connect you to invest actually in the Indian market, because we are able to not only understand the specific details of how the economy is performing there, what particular sectors are doing well, we also have access to the products on the ground. And then, of course, with technology, it's on your phone. So we've built a fantastic technology that, all you need is your phone. Say, I would like to invest in this category, and boom, tap. In a few minutes, the transaction is done. So we are using our own global capabilities, our insights on the ground, and our ability to connect clients to the products on the ground right here from Kenya. Yeah.
It's interesting because sometimes, folks want to know that the people who benefit from such a system, the people who benefit from walking this journey, are actual human beings. Right? And that, okay, I don't want to get into something that's an idea. I want to get into something that is a reality. So how have you actually seen? I mean, you've given us a beautiful example, Edith, of one person who was born all over the place and then now is actually one of the biggest investors. So how have you seen that these things, and I think for both of you, how have you seen that these things that we speak about are applicable to real life human beings and have actually changed their lives?
I think we have many examples. We have many examples. In the last 4 or 5 years, we have seen our wealth proposition grow. And to Paul's point, cuts across different profiles of clients. The starters, those who have already invested, are now looking for even more cross-border opportunities. So in that sense, we have tangible outcome. But what we feel is that we've not even scratched the surface. We want to, and that's why we are here today. Other than just creating awareness and letting people know that come to Standard Chartered, we have the capability. We want to now get to a level where you make the consideration. You actually get to do it. Because today you've heard us talk about this thing. Our desire is to get you to start. To just start doing it, start investing, come speak to us and start doing it. Because there are many people wondering out there what to do with their money. We know our friends, we're in different investment chamas, if you like, for women, and even men have their own associations where they pool funds together. But what do? We buy more land. We buy more apartments. Why don't we diversify? We are giving this alternative to say, okay, it's fine, you've bought enough land now. How do we help you to start diversifying? So I think for us, the challenge we have, or the motivation, is that we have not scratched the surface. That's the motivation.
I think for me is when people vote with their money, you have to believe it. If I look at the story of what we call asset under management, meaning the money that we are managing for clients, from about 2018, we were about 19 billion shillings. And I'm talking numbers that are published, you can actually go there. At the close of last quarter, we are talking in the north of 286 billion.
Wow.
People have voted with their money.
Shillings or dollars?
Shillings, I'm sorry, shillings, right? Just coming close to about $2 billion dollars, right? So people are voting with their money. So these are Kenyans. It's not money coming from outside of Kenya. These are clients in Kenya, clients of Standard Chartered. And we're not talking about corporates. These are individual clients and small businesses only. So people are voting with their money. So the story is believable. And of course, the story of Shilingi, as I mentioned, the young people have come in as well. And the beauty of this is it's giving a lot of, coming back to your proverb, hope. That the future will be better. The young people are coming strong.
It's bright.
And they can see it.
Yeah, they can see it.
Indeed. So the way to get in touch with the Standard Chartered Bank and of course to get to understand about this priority banking and how you can be taken and guided through this is prioritybanking.ke@sc.com. I have to say it slowly so it's not SE. prioritybanking.ke@sc.com. You will be able to talk to people who will then guide you on what Paul Njoki, CFA, has been talking to us about. He's the head of Affluent Banking and Wealth Management Products for Kenya and East Africa. And Edith Chumba is the head of Wealth. Full stop. Then they've also added retail banking for Kenya and East Africa, Standard Chartered. It's been our Wealth Wednesday conversation.
This is the Situation Room, the only way to start your day.